All right, Muthoot Microfinance is in focus. The stock is down by 3%. Sadaf Sayeed, the CEO of Muthoot Microfin, is now joining us to talk about the earnings fine print. But just before we do that, Sadaf, just a quick view about where the sector is right now. I mean, well, there is no question about it that the government, the policymakers, all stakeholders understand how critical microfinance pocket is, or the ecosystem is, to ensure that credit reaches the bottom of the pyramid and the needy out there. But at the same time, it goes through a lot of regulatory kind of push and pull, and then of course some natural calamities, this, that. For whatever reason, if you look at the valuations right now, one gets a sense that these are kind of challenging time for the entire space. And then we see news coming in, some M&A also is happening in your space. So what are your thoughts on overall what's happening in the space, and why, what kind of times are going through for your space?
Good afternoon. Thank you for having me here. I think you have pointed out a right kind of development in the sector. Definitely, there is merger and acquisition opportunities which are there. I think part of it is driven because of, the attractiveness of the valuation, because from an investor point of view, definitely these are attractive valuation, because usually this is the time when the industry is kind of slowing down, and Q1 is usually that time. And also, I think there is enough potential in microfinance space to grow. We estimate almost around 17 crore household which are there, which need microcredit. Right now, microfinance industry caters to around 7.5 crore. So there is enough headroom to grow. I think the tighter norms that have been put in place, the industry, the way it has responded to recent development, I think which shows that the industry is mature. But with the restriction in terms of four lenders and other things, becomes a little bit of a prohibition for the new entrant to come in. So, and also for the smaller entity to grow. So definitely, as the growth kind of stifles down, more people will look at merger and acquisition, growing by way of acquiring other entities, smaller entities, or people who want to venture into this business will look at acquiring the existing entities. So I think that's why the merger acquisition play would be slightly higher in this space.
Okay, right. Mr. Sadaf, good afternoon. This is Vinny joining in the conversation as well. What we want to talk about, let's just talk a bit in terms of numbers now. While obviously we are seeing NIMs and IIs, they have seen an improvement this time, but what is the outlook for FY25? Given the current scenario, what is it that one should be expecting?
Thanks, Vinny. Muthoot Microfin has performed well during the quarter. Definitely, this was a challenging quarter because of the general elections which were there, which was a prolonged kind of an election phase. And Q1 is anyway slow. But despite that, our AUM year on year has grown by 22%, and our total income has grown by around 33%, and our profits have grown by 18%. So which shows that there is a good kind of a traction in Muthoot Microfin, and also our NPAs have remained under control. Year on year, there is a 65 bips reduction of NPA from 2.75% to 2.1%. And even if you compare quarter on quarter, the NIMs, the NPAs have come down from 2.29% to 2.10%. Even net NPAs have reduced to 0.23%. So there is definitely a good traction, and our collection team and our underwriting quality is holding good. We are confident of holding on to our guidance. We believe that we can continue to grow at around 25% growth rate, and our portfolio quality will hold good. We will be within the credit cost guidelines that we have given, and generate an ROA that we have predictive of around 4.2 through 4.5%. Our NIMs have held well. It has improved if you compare year on year from 12.9% at the end of the year to around 13.3%. And this is coming from the back of our ability to borrow cheaper rate. We have been able to reduce our incremental cost of fund to 10.3%. And this is really working out well. We had a strategy of diversifying our sources of fund, and we have been able to get access to the ECB market. And in the last 6 months, we have borrowed around 113 crores, $113 million of borrowing through ECB routes. Close to around 1100 crores of borrowing, which has come at a very competitive rate at around 9.6% effective rate, including the SOFR plus margin plus hedging. And we will be doing more such transactions. This allows us a better ALM because these are long-term funding, and this allows us to use this money more for lending, churning the money. And also, these are a cheaper fund. We will definitely be able to bring our cost of fund down further. Even on the existing borrowing, 40% of our loans are on a floating rates from various banks. And we've been able to negotiate well with the banks also, and they've been kind enough to pass on the benefit of kind of cutting the rates. And we have been able to reduce cost, and that's how the margins are going up. Even though we have passed on the benefits twice during the year to our customers, we have reduced the rates by 55 bips in January. And recently, we have cut rates by 35 bips, overall 90 bips of cut. But we have been able to maintain a margin of around 13.3%. And we believe that we can easily achieve our guidance.
Right. So while, you're in absolute terms, your quarter has been pretty good in an overall challenging environment, but comparatively 20 basis point lower is what your NIMs are this time sequentially. ROAs have also come down 30-35 basis point. So you've done a great job of navigating the company in a tough market and environment. But can we say that these are bottoming out kind of numbers and things will sequentially improve from here on, or they could remain challenging for some time? Because some of your other peers for last 2-3 quarters were saying this is the worst, but things kept on becoming, worse could actually become much worse. So how are things looking right now? What's the visibility?
Ajay, I think the things are improving now. Definitely, Q1 is a cyclical issue. It's not a kind of issue with the industry or with specifically Muthoot Microfin, because usually Q1 is a slower quarter. This time around, because elections were prolonged elections, so we were a little bit more prudent in terms of disbursing less. That's why it's a little bit more slower than usual. But anyway, it's slower. Q2, we are already in the middle of Q2, and things are looking up. Definitely, Q2 would be much better than Q1, and Q3 or Q4 are the main quarters for any microfinance and lending business. They would be definitely very well. I think the last whatever events were there in terms of flooding, any sort of issue of excessive rain, that has now almost passed. I think August would be the end of this. And post September onwards, I think we will look at much better growth in terms of business as well as portfolio quality. Usually, whatever impact has to happen on the collection efficiency happens up till August because of rain. We have been a little bit more prudent. We have taken a natural calamity insurance for our clients. So wherever there is any sort of a flooding and all that, our collections are not affected. And we've been able to get the claims from the insurance company. So that's why our portfolio is not affected that much. And we believe, I think the coming quarters would be much better, and Q3, Q4 would be very good. And by the end of Q3, we should be back to around 98-99% of collection efficiency on time. So it should be good.
You're saying that Q3, Q4 of this fiscal, you could go back to upwards of 4% in kind of ROA and 13.5 or maybe closer to 14 in terms of NIMs?
NIM guidance we have given of 13%, and I'm pretty confident of maintaining that 13% NIM. And this would be driven by better efficiencies in borrowing. So we will be able to bring our cost of fund down. And if there is any other benefit, we will pass it on to our borrowers. We will reduce the interest rates on lending. and we can easily maintain our 13% guidance on the
Just one
NIM.
quick word, Sadaf, sorry to interrupt. You can bring your cost of funds down to what? You're 11.07 right now.
Yeah, currently overall cost of fund, including the earlier cost of fund, is 11.7. Our incremental cost is 10.3%. So already there is a delta of 77 basis points. If we are able to bring all the loans down to this level, we should be able to bring down the cost of fund down by 70 to 75 bips. And we see that the ECB borrowing that we are doing, which is coming at 9.6, even at a cheaper rate. So there is scope of reducing that cost of fund. Definitely, we will be able to bring that down. And ROA, basically in this year, this quarter, the disbursements were lower. That's why the ROA is slightly lower as compared to Q4. Going forward, I think the ROA would be in line with what our guidance is, which is around 4.3 to 4.5%.
Okay, sure. So that is what we're keeping an eye out on. Cost of funds expected to come down by 70 to 75 basis point. Sadaf, thank you so much for joining in with us this afternoon on ET Now. Always a pleasure having you in this show.
If you like this video, then like, share and subscribe to ET Now.